Hello everyone, this is me, CA Aishwary, and today, in collaboration with CA Sansaar, I am here to present you a topic that is triple accounting. Triple accounting is something that is new in concept and is starting to take pace. And I'll take you directly to the presentation here. So yeah, let's talk about triple accounting. Before I get down in what triple accounting is, I'll just give you an overview about what double accounting is today. So double accounting is a system that was introduced by an Italian mathematician, Luca Pacioli, in the 14th century. Since then, there has been no evolution in anything that is bringing any addition to the double accounting system that is happening, and since the 14th century it has been the same. So the double accounting system solves a simple yet challenging problem of ledgering within an enterprise. So I say within an enterprise because every time you record a transaction, the transaction is recorded in your own books, so it is within your own enterprise. It's a siloed record which needs constant reconciliations and follow-ups to ensure that the outside parties have the exact amount or accounts that we have. So it was more of a art than a science, a art to record the debits and the credits so that if we are at the same page. But with the evolution of the internet and the fast-pacing world, there is a need to evolve double accounting. So with the help of the technology blockchain, double accounting is transforming itself now to triple accounting system. So what's triple accounting system? Or let's first discuss why triple accounting system. So triple accounting system is needed because while earlier we were happy doing within enterprise transactions, today we need cross our organizational transactions. Everything that we are writing, we want to be sure that the same transactions are being written in the person whom we are transacting with. Second, the internet has made us reach around the globe, but what we lack even today is the trust. So sitting here, what I am doing is I am doing transactions with the parties that I trust, that I know, but I'm not doing transactions with the parties. Let's say if they are sitting in a different country, let's say they are sitting in Australia. I don't know a person. Why will I do a transaction with him? And when I have to supply the services. So same way most of the people around the globe feel. So there is a lack of trust among all the participants that is hindering the business of today. Then next is due to lack of work, due to a lot of work, manual interventions and validations. So what happens is every time you record a transaction, there are manual interventions, there are people doing the entries manually into the software, or they're automating it, they're validating it, and then there is a need of significant computing and human resources to reconcile. Let's say I recorded a transaction at 10,000 rupees, and the person whom I transacted with recorded the transactions at 1 lakh rupees. So it was not his intention, nor I'm saying that he did it in bad faith. But let's say in a month you have thousands of transactions with that person, and at the month end when you're sitting reconciling your records, your records are out by 90,000. So every time what you'll have to do is you'll have to go into Excel, apply a VLOOKUP and things like that. So that's takes significant computing and human resources. And the last one is due to being prone to errors while doing the double entry. So these are the things why we need innovation, why we need a new system, and that's why we need triple accounting. So before we get into what triple accounting is, I want to focus on two things before that. So triple accounting is done on a public ledger that is maintained by a third party. I'm taking an example of IBM here. There are other parties like Consensus, Subledger, etc. These are the startups that are working on making triple accounting possible. So what happens is a third entry that is being generated is recorded on a public ledger. That public ledger is being run on a blockchain network. This complete network and the public ledger is maintained by the third party, like I said, IBM. So why IBM is doing it for us is because if for every transactions, or for every month, or for every year, there are charges for these recordings. So these charges are minimal as compared to the charges that we are paying today for the reconciliations and for the expenses that we are occurring today to go through all the work that we are doing today in double accounting systems. Okay, so that's the first thing. So the next question that would come to your mind is, why should be me as a company or as an individual or as an enterprise should take my data and share it on a public domain? So it's not a public domain, it's basically a public ledger which is encrypted, and even IBM cannot see the data that you are saving in that public ledger, because that public ledger is encrypted via the organizations or your individuals or the firm's proprietary private public key, uh, which we call in blockchain terms as cryptography. So that way, nobody is able to see the records until and unless I, as an individual, or I, as an enterprise, wants someone else to see my records. So that way, your records are completely safe with us, and they are completely at a place where they cannot be seen until and unless you want it. Moving ahead, let's talk about the entry that you have on the screen. So on the screen, what you see is a transaction between Alice and Bob. So let's take a scenario, let's take an ideal scenario where Alice says to Bob that, hey Alice, hey Bob, I need a website for me. And Bob says, okay, I can get it to you in a week. So Alice says, how much will you charge? So Bob says, okay, I'll charge $100. Done. Within a week, Bob completes the website, hands it over to Alice, and the transaction is complete, where Alice debits his expenses and credits his cash, and Bob debits his cash and credits his revenue. So that was an ideal scenario that you saw. But in the real world, that does not happen. So let's say there are scenarios where uh, Alice did not get the website in 7 days, or there are some terms and conditions attached to a contract which Alice thought or interpreted in a different way than Bob. Or let's say there were part payments where Alice said, okay, if you reach this level, then I'll be giving you this much amount, etc., etc. So there may be scenarios, there may be plenty of scenarios. Let's say Bob completed his website, delivered it on time, but Alice says, I don't have the money. So when he built the website, he already invested his time, and since it's a personalized thing, he cannot sell it off to someone else. So now if Alice says, I will just pay you $50, so these are the things that double accounting system doesn't take care of, and that's why it's just an art. It's not a science. So now what we do in a triple accounting system is, as soon as Alice and Bob agree for it, a smart contract is written. So a smart contract is a contract that is simply put away in coding language, where all the things that you have in a normal contract are embedded in a coded language in a smart contract, and then it is deployed on the blockchain network. Now what happens is, this contract is only deployed when both the parties are on the same page. If Alice understands something in a different way than Bob, they both will not agree, and they both will not enter into an agreement. That way they'll only enter into an agreement when they both agree. So as soon as that happens, Alice is credited in the public ledger via the third accounting, and Bob is debited, because in that so that completes a double accounting in the public ledger. And that way what happens is, third accounting entry is generated. Now you'll say, so what? So when this is happening via the smart contract, everything is being executed on its own. So executing a smart contract is can happen in two different ways. The first way is where as soon as the enter into a smart contract, the smart contract spins that $100 in Alice's account. It will not take that amount out. It will keep it in Alice's books only, in his bank accounts only. But Alice cannot spend that amount in other things. So it will be there, but they will not be able to use it. And as soon as Bob fulfills all the conditions, and they both agree that yeah, the service has been received, uh, the smart contract will automatically pull out that $100 from Alice's book and give it to Bob. So that way both the people, if have agreed on something and all the things went ahead as smooth as they wanted it, all the things would be taken care automatically via the smart contract. So now there are conditions where I talked about that. Let's say Alice says that I'll give you 10% advance, I'll give you 30% after completion of 50% of the project, and likewise. So what happens today is, if every time this happens, someone has to go to the bank account, give a instruction to the bank, and then record those accountings in their own books. These all things happen manually today. So with this, with the help of the smart contract is attached to your bank account, to your books of accounts, to the public ledger. So a smart contract is taking care of everything. So in this way, what is happening is, you don't need anyone to do all these transactions. So by paying partially the amount that you are investing today, or you are expensing today, you're getting your things done. The second way is where that same $100 amount is converted into tokens. So in today's world, where we are living in an era of cryptocurrencies, let's say Bitcoin or Tron or Ethereum, there are plenty of such coins. So in that way, the smart contract can be executed in that way. So let's say they decided to convert that $100 into Bitcoin. So $100 will be taken out from Alice's account. It will be converted into cryptocurrency, and it will be stored in the smart contract itself. It will not go anywhere. As soon as the services are completed, that $100 will be that $100 worth of Bitcoin will be given to Bob by converting those Bitcoins again back into the currency in which Bob wants it. So that way, what is happening is, even cross country, cross boundary transactions, where there are different currencies and you have to ensure that you have to buy and sell all those currencies and all, even that is taken care of. So by this way, the triple counting system is coming up and is going to replace all the accounting jobs that we see today. Moving ahead, let's talk about the benefits. I think you already have a good idea about the benefits, but still let's spin them down. The first is, it's real time. While today there are softwares like SAP, etc., which charge you in 9 figures for a software, and they have a huge annual fees. These services come at relatively 4 to 5 figure expenses. It's very less. The second is, it has a self auditability capacity. So what happens is, every time you people go to an income tax authority, or you go to any place where you have to show your books of accounts, so for every answer you have to print hundreds of pages and you have to prepare the reply. What now you can do is, you can simply, with the help of me being a client, what I can do is, I can simply generate a ID password in the IBM network, and I can give that to the income tax authority. They have to just go in, log in, and the best part is, you're just giving you can give the access of just a single transaction. You don't have to give the access to the whole thing. You just have to give the access of that individual transaction that you wanted income tax or the auditor to check. And since everything is there in the smart contract, you can easily view it. The best part about smart contracts and the blockchain network is its immutability, and anything that is written on a blockchain network, it cannot be erased. So there are no chances where you can fool anyone, or you can remove the records, or you can edit it. All you can do is, you can add a record. So whatever was there, suppose you wanted to change a record, or during the period of contract, you thought that now I want something different, and both the parties are agreeing. So you'll have to add that thing in the blockchain network, in that smart contract, and you cannot go and just delete the old provisions and insert that new line in that. So that way, it gives you a self-auditing capability. Then the third thing is, it improves your data management and security. So you're secure about getting a payment for the services that you have rendered. So that way, you don't have to go to your clients asking them, please pay up the fees, please, this is the due date, you should have paid the audit fees. So yeah, that's also a good thing. Then the fourth point is it reduces legal costs. So when both the parties are on the same page, understanding the same language that is being written on the blockchain contract, there is no scope of both parties reading those contracts as different and interpreting them as different contracts. So that way you reduce the legal costs again. Then the fifth point, which is the best point, it gives you healthier relationship with other businesses. So even if I don't know a person and I want to do something for them, I can do it because I know that smart contract is protecting my rights. It's protecting the revenue that I would be generating legitimately. So that way, yeah, it's fostering relationships. And the last one is trust to ensure more business. And so cross border, cross regional, cross language transactions are easy now, and that way the triple accounting system is changing and revolutionizing the things that are. Next is the companies who are building these platforms. So the platforms that are currently working here are the big fours, obviously, and IBM to be the major. These two are the major players. Then there are startups like Hyperledger, Ethereum, Consensus, Subledger. These are investing thousands of hours, millions of dollars to perfect this art so that they can be the first one to bring it out. And one more thing that I'll be specifying here is I'll be quoting one of the partners in Big Four in Deloitte, where he says that the whole revenue model that we had over the years is changing. If we do not invest in things like blockchain, and if we do not think about the future, our whole revenue model is in danger. So that's something that is said by Deloitte's partner, and there are other big four partners who are equally investing a lot of money in recent trends. If you want to see, they are what the people are doing, what these big fours are doing is they are hiring more engineers, they are hiring more people who can code, who can generate the perfect blockchain output rather than the chartered accountants that they used to hire. So the trends are already changing. You can look up all these things on the website that or on Google. It's these things are all available there. It's just you who has to find the time to read all these things. Thank you. That was me, Aishwary. So